Hello, everyone, and welcome to the BP Learning Channel. Today's topic is how to manage the money flowing through your new business venture, something I call finance keeping, something I'm very passionate about because without it, your business will stagnate, sell for something much less than what it is worth, or simply fail. Hopefully, you haven't launched your business yet. But if you have, today's session may prompt you to make some adjustments in your approach to managing money. I'm Debbie, a certified SBDC coach at the Business Incubator Center. The Incubator is a partner with the Colorado Small Business Development Center under the SBA, or Small Business Administration. I am also a former business owner myself, a former CFO for multiple startup ventures in the Silicon Valley, and a CPA with my master's in finance. That's me, folks, and I'm here today to help you understand why finance keeping absolutely must be the foundation of your business. People who come to see me without this kind of infrastructure are managing businesses that on the surface seem to be healthy, but just below this very deceiving surface, serious trouble is brewing, all because the finance keeping side of their business was never set up properly. I'd like to share a story with you about Melissa, one of my clients, so you will understand what I mean when I say that trouble is brewing. And here's Melissa. She lives her life in a frazzled state every day over money. She started a food truck business and hired a bookkeeper who was a certified QuickBooks Pro advisor to manage her finances. Within a year, however, she was scrambling to make the payroll every 2 weeks. 1 year later, her books were such a mess, she could not file her income tax returns or get a loan to buy a second truck and expand her business. Sales were strong. I could see that on her sales app, but I couldn't tell if the business was making any money. Unfortunately, she waited until her books were a great big mess to prioritize finance keeping. When I looked at her books, the cash and credit card accounts all had negative balances, big ones. I saw an expense account called Ask My Accountant with $200,000 in it, and something called Undeposited Funds with transactions going back 3 years, adding up to $100,000. That's $300,000, folks, of money running through Melissa's business in bogus accounts. No wonder her business seemed to be imploding on her, collapsing around her in spite of the robust sales she saw. No, I'm not kidding. I wish that I was. I wish I could tell you that Melissa was and is an isolated case, but unfortunately, about 90% of the people who come to see me with a business already up and running have books in chaos, just like Melissa. I don't want you or any of my clients to lose money because of fraud or neglect, but this is what happens when finance is not your priority. I don't want you to lose money because of fraud, because someone is siphoning funds out of a bank account, stealing inventory in a fulfillment center, taking alcohol home from a restaurant kitchen, or unlawfully using company credit cards. And I don't want you to lose money because of neglect. You are selling products with negative margins. You can't tell if branch locations are profitable. Customer invoices are not getting paid. And sales are not on the books. There's all kinds of things that can be wrong because of neglect. You are not taking care of your finances when these kinds of things begin to happen to you. And that's why today I want to talk with you about what finance keeping actually is and why it's so important. I want to talk to you about money, more precisely about how to manage your money and call it something new, something that better describes what you're actually doing and gives it the credence it really deserves. My goal today is to give you a new perspective on this thing called finance. Take some of the mystery out of this word. Get you more comfortable with the numbers side of your business. Finance keeping. It's definitely time to get a new perspective on this. Let's learn about how to manage your money and use the valuable information available to develop and grow your business and take home a healthy paycheck. Maybe even get rich someday. How to manage your money. That's what finance keeping is all about. Before we are done today, I want you to understand why a good finance keeping system, a stable finance system, should be the foundation of your business, the bedrock, the core. Every other facet of your business should be connected to this core and firmly torqued. This is critical concept 1 today. Takeaway 1. Let's take a look. And here it is. Critical concept 1, the first takeaway for today. Finance keeping should be the foundation of your business. Every business needs a stable financial system, a qualified finance keeper, meaningful financial reports, and routine reviews of financial performance. Without this kind of infrastructure, your business may stagnate or fail. Finance should be at the heart of your system. Everything else should be connected to it. Let's dissect this term a little bit now. Let's look at it in 3 basic elements. The term finance keeping and its 3 basic elements are the underpinnings of a stable financial system. 1. Comprehensive bookkeeping functions. This keeps the business owner from going broke and filing for bankruptcy. 2. Accounting and accounting aptness. I sometimes call this being accounting smart. This keeps the business owner from breaking government rules and going to jail. And 3. Financial analysis and robust reporting. This helps the business owner grow and make money. Let's talk about element 1, comprehensive bookkeeping functions. This is basic finance keeping. It includes bank reconciliations, payroll processing, inventory tracking, customer invoicing and collections, and vendor payments. This type of record keeping is done on what's called a modified cash basis reporting, a new term for you folks. And I'm introducing it to you because most of you will be using QuickBooks. And inside of QuickBooks, when you click on cash basis to generate a set of reports, cash basis in QuickBooks is really modified cash basis reporting because it includes accounts receivable and accounts payable. And guess what? Modified cash basis is not allowed and does not meet tax requirements. But your business needs more than cash or modified cash basis reporting at the end of the day. So let's move on now and look at element 2. Let's talk about element 2 now, accounting aptness. This is advanced finance keeping. It includes financial reporting and tax reporting. Financial reporting is done on a GAAP basis. We'll talk some more about this in a bit. Bankers, investors, government agencies all want GAAP basis reporting. Of course, we still need tax reporting. This includes sales tax, payroll tax, and federal and state income tax. Tax basis is very different, however, than GAAP basis reporting. GAAP basis is done on what's called an accrual basis, while tax basis can be done on an accrual basis for larger companies and on a cash basis for smaller companies. I want to introduce you to a very important concept right now. And this might be a new concept for some of you. You can actually keep 2 sets of books, a GAAP basis and a tax basis set of books. And this methodology allows you to meet all compliance requirements for your company. Yes, believe it or not, you are allowed to keep 2 sets of books, and it's perfectly legal. And now, element 3, last but not least, financial analysis and robust reporting. This is expert finance keeping. It includes the ability to download data for analysis into Excel. Why? To analyze trends, to prepare cash flow projections, and do competition comparisons. In an expert system, you should be able to track your data by department, by product or service, by all different classifications. Why? So you can assess profitability, valuation, liquidity, leverage in all different parts and pieces of your business. And finally, an expert system should have budget capability. Bottom line, you should be able to look at your data in all different ways. By department, by location, by project, by customer type, and a whole lot more if you have the right system. An expert finance keeping system allows you to maximize value and performance because you have powerful financial reporting. All right, Let's talk about critical concept 2 now. Takeaway 2 for today. And then we'll put all this information together. Concept 2 is every business should keep 2 sets of books. Yes, you are allowed to keep 2 sets of books. Companies do this all the time. Takeaway 2 for today. Every business should keep 2 sets of books. This is critical concept 2. Managing your business is all about maximizing value and profits. That's your management set of books. Tax reporting is all about minimizing tax liability. 2 very different goals. Your primary set of books should be used to manage your business. Manage your business on a daily basis using GAAP basis accounting, something we'll talk about in just a few moments. Then, at the end of the year, you make some required adjustments and voila! You have a secondary set of books for filing your tax returns. These books are done on a tax basis. And now, I want to plant a few seeds. You will have to learn some new concepts and some new terms. You don't need to be a finance expert, but you do need to understand some basic principles. While there are many of them, I will only be introducing you to the ones I believe you need to know to properly manage your business and talk to bankers or potential investors. Knowledge is power, folks, and some very basic skills will help you be successful. But don't worry, we will step through these terms and concepts slowly. I'm going to introduce you to 4 of them today. We have been talking about keeping 2 sets of books, a management set of books and a tax set of books. Let's dig just a little bit deeper. Your primary books or your management books are maintained on what's called a GAAP basis. This stands for Generally Accepted Accounting Principles. These are rules and principles issued by the Financial Accounting Standards Board, or FASB. Big picture, the goal under GAAP is to match all the revenue you earn on a daily basis with the related expenses. Let me give you an example of this. Let's say that today you sell $100 worth of books, and the customer pays you in cash. You purchase those books for $50, but you have not paid the vendor yet for the books. Under GAAP, you will report the $100 of revenue and the $50 of expense, even though you have not paid for the books yet. Let's see what happens on a tax basis. Tax basis is based on rules and principles of the tax code established by the Internal Revenue Service, or IRS. Under tax, companies try to write everything off as fast as possible to save money on taxes at the end of the year. New concept: keep 2 sets of books and 2 new terms. Embrace these terms. You are allowed to keep 2 sets of books, one on a GAAP basis, which basically is a steady state basis of earning profit and loss, and the other on a tax basis. And now the last 2 terms, cash basis versus accrual basis. Under cash basis accounting, accounts and reports only contain cash transactions. This means money into the business or money out of the business. This type of reporting is used mostly for taxes. Small companies are required to use cash basis, while larger companies must use accrual basis. Under accrual accounting, transactions are recorded as they occur, not when money is paid or received. This facilitates trend analysis, collections from customers, and preparation of cash flow projections. This basis of accounting is used to manage your business. And guess what? Under GAAP accounting, you must use accrual basis reporting. And there you have it. 4 new terms: GAAP, tax, cash, and accrual. Okay, so hopefully by now you are convinced that your business needs an expert finance keeping system, one that is capable of tracking dollars in and dollars out of your business on a steady state basis in all different ways, one that will help you manage your business and maximize its performance, one that has finance keeping at its core. Why am I saying this to you? Because without it, your business will never reach its full potential. As you can see, I wrote a book about getting your books up and running, hoping to give my clients a resource to help them set up an expert finance keeping system. Today, we have been talking about 2 major concepts in this book. In wrapping things up, let's go over what we learned today one more time. In wrapping it up, I want to say that every business owner should have an expert finance keeping system. The good news is that QuickBooks, a very affordable finance keeping platform, can provide you with everything you need in this regard. It can fulfill both of the critical concepts we've been talking about today. Critical concept 1, takeaway 1. Finance keeping should be the foundation of your business. Finance should be at the core. It should be the rock in your business. Everything else, legal, sales, compliance, marketing, every other function in your business should be connected to finance. This is an overview of a QuickBooks Finance Core system. Most small businesses begin their finance keeping journey with a QuickBooks plan of some kind, either desktop or online. If set up properly, QuickBooks will provide very robust reporting for any business. The heart of this system is a main ledger, which contains the accounting framework needed for reporting. It is integrated with all of the basic bookkeeping functions we have been talking about today. External web-based systems for banking and credit cards augment this main ledger system. Data is downloaded periodically or continuously into the main ledger, where transactions can be properly tagged or coded and then reconciled when monthly statements arrive. Some companies choose to use external programs for sales, called point-of-sale systems, payroll, inventory, and fixed assets. These are effectively subledger systems, which require an interface into the main QuickBooks ledger, either via some kind of automatic synchronization or manual input via a journal entry. When this finance system is running properly, many financial and operating reports are available for managing the business. The primary ones include a balance sheet, a profit and loss statement, and budgets. And if set up properly, this information is available by department, location, and customer type, or more. Robust reporting. This kind of capability is essential for a growing, thriving business. And now, critical concept 2. Takeaway 2. Keeping 2 sets of books will improve value and performance in your business. 2 sets of books, GAAP basis books and tax basis books. GAAP basis books, which includes accrual accounting, are used to manage your business on a daily basis. It's a means of maximizing value and profit in your business. Tax basis books are used to file federal and state income tax returns. Small companies must file returns on a cash basis, and larger companies can file their returns on an accrual basis. And that's all for now, folks. But before you go, I want you to do 2 things. First, and most importantly, find a coach or mentor, someone like me, who can help you get your books up and running properly. Not your tax accountant, not a bookkeeping friend down the street, but someone who truly understands what finance keeping means, who can help you set up a system to properly manage your business. A great place to start is your local SBDC center, where folks like me will be available to help for free. And 2, let me know with a comment or 2 below if this has been helpful today. Tell me what else you might like to know to be successful. And subscribe to the BP Learning channel so you don't miss out on more prosperity tips. Thanks, everyone, for listening. I wish you the best in your business endeavors. I wish for you lots of prosperity in your life.